We're going to talk about the economy. Historically, Bloomberg has used a recession probability model that incorporates factors like housing permits, consumer sentiment, corporate profit outlooks, and treasury yield gaps. It doesn't always work, though. For example, in October of 2022, Bloomberg projected a 100% chance of recession by October of 2023, driven by aggressive Federal Reserve rate hikes, tightening financial conditions, and persistent inflation. Obviously, that didn't happen. Here we go again. Consumer confidence fell this month by the most since August 2021 on concerns about the outlook for the broader economy, that according to Bloomberg. Many consumers actually think we will see a recession later this year. That pessimism has more than half of consumers putting off major life plans due to their uncertainty over the future state of the economy and the possible consequences of Trump's tariffs. Of those, about a third said that they're putting off buying a house, while I was going to say probably the interest rates and the lack of housing stock might have something to do with that, while 1 in 6 have put off education plans. Maybe they think, well, under Trump, you don't really need to be educated. And 1 in 8 have pushed back retirement. And that, I think, is an actually useful measure. Joining us to talk about this is friend of the show, Aquiles Larrea. He's the CEO and founder of Larrea Wealth Management and the author of the book Wise Up With Your Money. Check out his new YouTube channel, Aquiles Larrea 1061, Aquiles Larrea 1061. Aquiles, thanks for joining us here on the TMI show.
Thank you for having me. And I'm still worried. You guys still got me worried about the whales in the previous segment. Put a buoy out there. Come on, I agree.
Put a speed limit out there. Come on. That they're getting chopped up by the boats, and these are endangered species.
There's not even 100 of them left.
That's so scary. And like RFK Jr., I know it's not his department, he's HHS, but he is a known, old school environmentalist. You would think he would speak up and say, "Hey, Doug Burgum, what's up with this, man? Like, put a buoy out there with a speed limit."
Doug wants to get rid of him. He wants more. He wants more species that could do work for us.
I know. Oh, I'm so sad about that, and I'm sad about our economy.
Should we be? That's the first question.
I think.
Should we be? I mean, I feel I'm not so convinced that we're about to, go tits up.
Recession?
Yeah, I'm not convinced of that at all. How about let's ask the expert.
Guys, the R word, really right now? Come on. All right, let's break it down. Let's break it down. All right. How do you have a recession? 2 negative GDP quarters. Okay, so 6 months worth of GDP at a negative growth rate. First off, the growth rate in the economy, although slowing down, is still moving at a pace that I'm comfortable with. Unemployment is still somewhat controlled at this point. So the factors, those are the 2 biggest factors that I see for the R word to get yourself all crazy about and worked up. Guys, it's not happening right now. I don't see it. Maybe I'm missing the boat on something here, but what I think at this point is that we are definitely in a bit of a slowdown. The question now becomes, is it the tariffs going to throw us into a higher inflation mode, which thereby starts curtailing the growth, starts upticking the unemployment and driving us towards the R word? That really is the question.
And possibly contributed by rising unemployment due to laid off federal workers. How much of a factor could that be?
That's such a small segment right now versus the population as a whole, but it is a concern, of course. But at this particular point, it doesn't, you can go and find 100,000 jobs more, and fire all those people. You're still not going to have a percentage move to the downside that people are saying. Right now, there's a lot of anger out there because he was going to say he's going to bring down prices. The administration said they were going to bring down prices, going to help find more employment, and they're doing the exact opposite under the guise of, hey, we're just cleaning up the mess that the previous administration put in there. Come on, guys, let's see what's really here. Whenever you talk about Donald Trump, whenever you talk about this administration, the first question I would ask myself is, where is the money? What's happening with him and his administration? Who's making out on this? And I don't have the answer right now, guys, but when he makes an announcement that's shocking, you should be asking yourself, okay, who's getting paid on this?
Well, Aquiles, I mean, he's already now moving forward with the latest tranche of tariffs, right? He pulled back for a month. The last time that you were on, we were talking about this. It was going to happen with Mexico and Canada. And now he says he's going through with it, and he says it's coming on Monday. The cost of everything has gone up. I mean, I know everyone's like hyped up about the eggs right now because obviously it's a kitchen staple. Everybody has to have eggs in there, to make a lot of dishes. I would say in my household, we love eggs. But everyone's frothed up about that. But now you have this new trade war looming, not only with our neighbors, but overseas in Europe. Ultimately, isn't that price hike going to be paid for by the consumer? And how are we going to afford that?
Yeah, that's a great question, and it's a great observation and all. So what I see is exactly that happen. The pricing of current goods and services are not going anywhere anytime soon. All right. I don't care what this administration says. The reason being is, as you said, once the tariffs start hitting us, we are paying it from day one, because those costs are going to be passed on to the consumers. We are going to pay a lot of money for it, and there is no relief in sight for high priced goods, in my opinion, at this particular point in time. Also, you have to ask yourself, beyond that, look to history. Anytime the United States went into a protectionist or isolation mode, the economy shrank,
Hmm.
the goods and services went up, and led us into, the question is, will it lead us into the R word, or will it lead us into the D word? All right. Now, I'm
Mm.
not going there just yet. I don't believe that we're heading
Yeah.
towards the R word just yet. But this is, I can most certainly see why some economists are saying, yeah, this could possibly happen towards the end of the year and what have. I don't believe that. I think there were more factors in 2 years ago for
Hmm.
a recession, you know, to appear. And I
Achilles,
really thought we were going to have one 2 years ago.
let me ask you
I
I
did
about
too.
two
Yeah.
questions. First, one sort of micro, one sort of macro. So micro, um, is there still? It's my feeling that there's still pent up demand from the COVID lockdown, right, for consumers that are still they're still looking to go out, buy stuff, travel. The airports are crowded. It just seems like so. I'm just wondering if that's your assessment as well. And then my other question um, is the idea of the traditional question of recession versus non-recession versus obviously we haven't seen a depression in a century, but I mean, is that metric maybe no longer useful to describe the current situation? Seems more like a froze session or something where it's like people have houses on sale listed but they stay on the market for 200 days because they're priced too high and nobody can afford them and interest rates are high, but unemployment is low but there's not a lot of hiring going on. People just aren't really moving. In other words, there's an ennui in the economy that's not really reflected by traditional barometer of statistics. I mean, inflation's not really high, but prices remain high. So, people are still like unable to really afford the rent and other things. So is there something else going on, something new going on that probably could be described differently?
I think it's a lot, it's this fear, uncertainty, and doubt going on right now, the FUD. And what's happening is that people are, as you mentioned, the actual numbers, people enjoying themselves and taking those discretionary costs are still flowing now. It is never a sustainable thing in the economy, but it is still going on right now. Purchases are still being made in housing. Let's just take that for a moment. housing, it's about to turn from a seller's market into a buyer's market. You're starting to see incidents where the sellers are having to concede more to buyers. And, I was telling people wait 6, 8 months, but it started earlier, where you can go put put a bid on a house and you're going to be able to pick it up, and you might get some concessions in there as well as a good price or a seller's credit, they call it. But overall, we are seeing a positive trend with negative sentiment. So
Mhm.
that's that X factor you were talking about,
That's so weird.
where what's the underlying thing? Still a lot of positivity out there. And I gotta tell you, I'm so positive I glow in the dark sometimes. But when it
Really?
comes to these type things, you
Or are
never
the
know.
number
It's
or are
not
the numbers
sustainable.
wrong? There was a piece in Politico came out about a week ago that talked about how unemployment doesn't, like you're counted as employed even if you work like an hour
Right.
a week.
Yes.
I
I
mean,
was
you're
gonna
not
bring that up
employed
too.
really.
BLS data is a scam nowadays. We can't trust BLS data saying that we're less than 4% unemployment. I mean, Ted and I are examples of some unemployed people right now. We were made unemployed,
But
4 or
we're not
5 months
counted as
ago.
unemployed.
Why
Yeah.
wouldn't we be though?
Well, there's a lot to that, and you're right. A lot of people are working part-time, and those numbers are getting counted in there. People are working the gig economy, and those numbers really don't
Mhm.
figure into that. People will do at the bottom line, I think, guys, is that people will do whatever it takes to survive,
Yep.
for
Of
their
course.
families and for
But they'll be
themselves.
miserable doing it.
Of course, but at the same time, it will be done. And how it figures into the overall unemployment numbers and the like is not an easy figure. And we're just going to have to go on some of the traditional data, but the economy is still in a good mode versus when I want to say, around 6 years ago, or even just recently with the inflation being 11% or more. We're in a better place. The inflation rate is still somewhat measured and controlled. Yeah, it may go up, but the real caveat, the real danger here is prolonged tariffs and their effect on the sustainability of these particular numbers that are we're seeing now. Are we going back to 7 to 9%? Are we going back to 11%? I don't foresee it right now, but once again, protectionist and isolation policies have never been good for the US economy, will never be good for the US economy. It's a gimmick. It's something that I don't believe in ever, because we make so much money with our partners than just trying to think we're going to tax them
Well,
and shoot ourselves in the foot.
let me make the argument for tariffs for the Trump point of view, right? Which is that okay, so prices go up obviously when we slap tariffs on imported goods, and when there's retaliatory tariffs, we suffer. We're not able to export as much as we'd like, but at the same time, then we protect American jobs, and that obviously has a ripple effect in the economy. If we especially we still have some manufacturing. We'd like to keep it, what we've got. So the question is kind of I think policymakers during the period of deindustrialization of the 70s through the 90s really made a mistake where they tended to to emphasize the American consumer at the expense of the American worker. And this almost seems like tariffs are an attempt to redress that. My personal feeling is it's probably too late. It's probably not the right solution for what the situation that we now have. But I mean, that's the counter argument, right?
Yeah, and I agree with that, what you just said. I also think that the American worker is still in jeopardy right now. But here's what could happen, and this is the positive side. The only positive side of tariffs that I could see is that, say they start bringing the factories back to the United States, which I really honestly don't see big movements on that side, but who knows? but we start to see more hiring. We start to see more expansion. This is where the tariffs could come in. And ultimately, I believe this administration, tell me if I'm wrong, they want to eliminate the IRS. And if the tariffs take hold, and let's say it really goes to the countries that are paying them, uh, how different would this economy be if we as individual taxpayers are not subject to paying the high
Wouldn't that be?
taxes that we are right now?
I mean, first of all, I mean, you and I both know, Aquiles, there's not enough money in tariffs, right, to make up for
Correct.
income taxes, right? It's like less than 2% of revenues into the Treasury currently come from tariffs, and even if you jack it up, you're not going to get to 100%, right? But like, I guess the question is, isn't that like the most, you're going back to a 19th century economy, which would be so insanely regressive that we can't even imagine the level of poverty and misery that we would see across every economic class that's not super wealthy.
Right. And imagine kids working full time during during that time. Imagine no worker safety rules. It was a pretty miserable time. I
Yeah,
agree with you.
money
But right
stopped
now,
circulating a few times. It was that bad.
we most certainly need to take it back to the 70s, when we had the oil crisis, and we had high interest rates on everything. That is what I foresee being more of a reality than anything else,
Yeah,
but not at this
when
point.
America was at the peak of its power, we had a really high income tax on the wealthy.
Oh yeah,
The
it was over
post-war period
50%.
before the Vietnam War. Yeah.
Yeah, yeah, absolutely. I also
Trump
believe
is
that.
moving in the opposite direction. Let's not forget. I mean, we're, it seems like what they're doing, he says it's temporary, is that we're going to slash these taxes and basically retain these loopholes for the ultra rich temporarily, and we're going to fund it by cutting Medicare and Medicaid. So that's, I mean, for me, even though the data the last 2 quarters are not consistent with what we would predict for like recession, because of the rhetoric, I think, coming from the Trump administration, that's why I'm really negative and bearish on what's going to happen to the economy by Q4, because if we're funding these tax cuts on the backs of the poor and working class through, Medicare, Medicaid, stuff like that, these aid programs, that's how we're going to fund it. And he says it's temporary. I think that's bad news for I mean, the regular retailers, like for example, Joann Fabrics is going bust. All 800 stores being closed. All these different stores are going belly up, and we're not seeing anything but these Silicon Valley bros really expanding their empires.
And they don't hire anyone is the
Right.
problem. I mean, I don't know if there's really to me. You guys correct me if I'm wrong. I think the daylight I'm seeing between Aquiles and you, Manila, here is about timing. I think what I'm hearing Aquiles say is it's not going to happen this year. It could happen, but if it happens, it'll be later.
Yeah, absolutely. I actually think that if it's going to happen, it would probably be either first quarter of the year or second quarter of the year.
Mm-hmm.
And I don't think it's not going to be as bad as people are saying. All right. But once again, the administration could completely reverse course. They've done it several times already in its brief tenure. So as far as that's concerned, it could completely do a 180, and they get rid of some of those policies because they see very quickly that they don't work. But who knows, guys? It's not really a sustainability thing. What if I pose this to you guys, what if the economies that we're slapping these tariffs on play ball? That's going to be a completely different ball of wax. We're going to also see growth. We're going to see unemployment remain controlled. And those are the factors
I think they
that
will play
go
ball.
into the. What's that?
I think they will play ball. I think
I
we've
think
already
so
seen
too.
that with Colombia.
Well, we saw it with Mexico, and
Hmm.
we're definitely going to see it with Canada. It's just easier. It's the path of least resistance. Play
Hmm.
ball, play nice, and make money. That way, your particular country continues to grow.
Hmm.
Yeah, Robbie, you've got a question for Aquiles.
Yeah, just real quick. One of the things that Elon Musk was saying in his earlier soundbite that we played was that one of the reasons he was taking a chainsaw to the federal government was because of the national debt, trying to get the deficits down, trying to get spending under control. My question to you is: does the national debt even matter anymore, with it being as big as it is? And if it does matter, why would they be pushing for tax cuts for the rich instead of keeping revenues up to pay down that debt? It doesn't make any sense. It seems like they're talking out both sides of their mouth, and I don't understand it.
Yeah, yeah. Administration speak with forked tongue. Yeah, absolutely. I agree with you on that, Robbie. Great question. What I think, if you go a little bit further with what you're talking about, you have to ask yourself, all right, we're going to do all these policies, yet at the same time, we're giving the rich a tax cut because they still believe in that nonsense of trickle down economics, because that's absolute nonsense. And it's been proven that it
Or do
really
they believe
does
it,
not
or are
work.
they just saying it as an excuse just to get what they want?
That's it. It's a measure of control, in my opinion.
So, does the national debt even matter?
I don't,
Is there even a point in trying to pay it down at this point?
we've had national debt since the Revolutionary War. And people they gasp, oh my God, it's this and all that wonderful stuff, when they should be saying to themselves, the type of debt that we have, a big portion of that we've had for a long time, and it's good debt. It's not something that we've not seen. Although, people forget the debt, if you take it from 100 years ago and look at it now, we're talking exponential growth. But we've also had exponential growth in our economy, in our growth of the country. At that time, we could say, hey, we only had 100 million people, just talking out loud. And then now we're over 350 million people, I believe. So it could look completely different 20 years from now. There will still be a national debt. That's not going away. I don't think it's relevant anymore. I personally believe that some of that debt is good to have, and we continue going forward. I think the debt hawks are just, it's a folly to try to think that you're going to get rid of the national debt by cutting Medicaid. Did you look at there was a Wall Street Journal this morning article this morning, and they were talking that all these cuts that Dodge is doing won't even have an effect of 4% on the United States as a whole. So they know the numbers. This administration are not fools. They are painting a picture of, oh my gosh, there's this A, B, and C. And when the reality is truth told, is that it may be absolutely false. It might be XYZ. Guys, when there's a recession, it doesn't come up on your door and knock on your door, say, hey, I'm here, guys, let's have a party and stuff like that. No, the recession comes, you usually find out 4 to 6 months after.
Hmm.
That's how economics works, because they don't have all the numbers in to tell you, hey, we're in a recession. But you sure feel it. I mean, for all we know, we could be in a recession in particular sectors,
Hmm.
So foodstuffs, maybe. Other sectors, maybe. We don't have all the data. And the data is inconclusive when we get it. There's not enough to say definitively yay or nay.
So what's so frustrating about this? It reminds me of Malthusianism, right? Which was Thomas Malthus in, I think it was the 1780s. He was a British demographer, and he kind of believed that the population around 1800, year 1800, of the world would tip into the point where it would become unsustainable and nobody could have enough to eat. We would all starve to death. Humanity would die. Obviously, that didn't happen. But there's and sort of like with the national debt, there's sort of like a psychological feeling like, well, look at this chart. Look at like how fast the debt has grown. Look how fast our population has grown. How can, in my lifetime, the population of the world has gone up, I would say, I don't know, maybe 5 times. It's probably quintupled. And it's like, how is that possible? And like, so at some point it's going to become unsustainable. We should stop before it does, but we can't know in advance, A, if that's even true, or B, if it is true, what the evil number is that goes too far. And then I guess it's like, so we just keep going and hope we don't hit that number, or we don't know that number even exists. If that number doesn't exist, I mean, it's really a very strange psychological experiment.
Yeah, and who knows what the reality is? We could be within the matrix and all that crazy stuff, but let's not go down that rabbit hole. Let's stick what we got here. The factors for a recession are not in play at this current moment.
Mm-hmm.
I do not believe that we are at a point to head into that negative growth. I think that, there's some rumblings, absolutely, but the numbers do not support it. They never supported before a recession actually occurred. There are some signals, but I don't believe that we are at that point, guys. Maybe
as a freelancer, I'm a canary in the coal mine. I've always known when a recession was upon us before it was declared, because when that happened, my payments started to come slower, or some of my clients would go out of business while I was waiting to be paid, or I would get cancellations. I mean, anyone who's a freelancer and supplies to a very strapped industry like journalism, you just know it. And then it's like, well, duh, it was a recession. I knew that. I'm not seeing any of that right now. It's like everybody's paying on time. Everybody's like, they're not worried about paying. No one's canceling me. It's not like everything is robust, but everything's just puttering along.
Like I said before, recessions don't come and knock on your door. They don't say, hey, come on, what recessions do, you feel the pinch. Like you said, you feel the pinch before the pinch arrives.
Before you see the pincher.
The jaws.
Behave yourself,
like,
Manila.
Like,
Stop
damn it,
pinching,
who's
Ted.
pinching? That's great. Like, where did that hand come from? And it just creeps up behind you. I agree. I think personally, I think it's gonna happen before Q1 of next year. I'm gonna call Q4. Last thing I want to pick your brain about, Aquiles, before we let you go, is, I mean, how is Wall Street responding to all of this? Because obviously there's a mishmash. It's a mixed bag of things coming from Trump, right? Like all of these big tech companies, these meme coins, just everything is all over the place. How is Wall Street responding to this? This is your area of expertise, your wheelhouse. How is Wall Street responding? Because however they respond, it does have ripple effects to us regular folks, the consumers, like Jane Doe out at the grocery store.
Yeah, absolutely. Let's first and foremost call the canary in the coal mine, like Ted said. What I see, especially on the street right now, is the fact that we've had a run up of 10% in 2 months we're just getting the correction now. So we're seeing that movement to the downside. It's what I tell my clients, this is normal. This is how you have an efficient market. All right. This is not a long-term trend. Nothing that I've seen on the investments that we are in says that. As we talked about before, orders are still coming in. There is still growth guidance by these companies to the upside. AI is in its infancy. It's like a little baby. It's not even 2 months old. All you can do is cry, kick, and scream, and of course go to the bathroom. So you take care of the diaper. But overall, the overall economy over the stock market, should we say, is in a positive trend, because we see how resilient the stock market comes back when, I mean, there's a lot of volatility, so it sure freaks everybody who doesn't know about volatility in the market out. You know, it freaks you out a little bit, but the resilience that we have seen in the market honestly has been somewhat breathtaking. And I foresee more of the same this year, that we're going to see run up, correction, run up, correction throughout the year, and still walk away double digit returns in the market. I see fund managers, hedge fund managers, private equities gearing up to make a ton of money this year. Present company, we're included. We're doing the same thing. We think that our clients are going to do really well. Maybe not as well as last year, but definitely above 10% year to date, barring any calamity long term or swan event like we saw back in the pandemic. But I really don't see that at this point. I don't see anything supporting that at this particular point. So I'm going to call the recession, as I said before, between Q1 and Q2 of 26. And I'm also going to call for a new high in the S&P and in the Dow Jones that will occur over and over again this year. Don't be surprised if you see it happen more than once.
So that would obviously have some political implications for the midterms.
Absolutely. It's people, they don't touch anything in the midterms if the economy's going great.
Yes.
So it might be more of the status quo. But if it starts falling apart and we start having long-term corrections, we're absolutely, the consumer, like they did in this election, they're going to ask themselves, well, what you're doing is not working, and maybe we need to try something new, which would be logical. And, you can't blame the voters for doing that. We'll see.
Yeah. I mean, that's all anybody can do is we'll see, right? I mean, this the thing for presidential elections, they say, ask yourself, were you better off 4 years ago? And with these midterms, it's very simple. It's fresh wounds, because they'll say, were you better off 2 years ago? Right? For Congress, like, were you better off 2 years ago? People can think back that.
And Trump and the Republicans will not have the usual defense. I'm not sure how effective it ever is. But, he inherited this economy when he came into power from Biden. It takes a while for because he's so brash and so radical, and he's made big promises about, like, only I can fix it, about everything. He owns it. He owns everything. No question about it.
And that rhetoric is going to most certainly ramp up in a shorter period of time. Like you said, right before the midterms, people are definitely going to ask those hard questions. They're already doing it now. Look at all these contentious town hall meetings that the Republican side is having with their voters, because the voters have not foreseen, or they have not seen any change in the daily cost of living. And that was what the Republicans ran on.
Yeah, they're doing stuff that they didn't run on. I mean, who Trump didn't run on the Gulf of America, or getting rid of USAID that nobody'd ever even heard of.
Yeah, I don't know. That's all we can do is, I think it's gonna be a wild ride, and it's gonna be bumpy. I think by Christmas we'll turn around and be like, oh, you've been pinching me all along. I think that's what's gonna happen.
I'm with
by
Aquiles.
Christmas.
I think I'm on Team Larrea here.
I'm super negative about all of this. I'm like, boo. Like, this is, I think there's, it's my spidey senses. I'm going to say my reporter spidey senses that I feel something's not right.
My cartoonist senses say, yeah, next year, maybe.
I think it's not right. I think it's coming sooner, but we'll see. We'll see. Of course, we'll invite you back on, as always, to kind of break it all down, because you're there. You deal with clients, you deal with Wall Street. You kind of get a sense of both, right? And see how confident they are, especially if your clients are not feeling confident. I think that says a lot too, right? So I think you're a good person to ask. So
hey, a lot of traders at the stock exchange that I've talked to are very positive right now. on the market, but they agree with me. We need the corrections. We need to have that uncertainty and that regression back to the mean, as they say. They famously say, we need the regression to the mean to keep what I call the poker game that is the market honest. So we need that. Don't be afraid of it if you're an investor, and if you're not sure, talk with your advisor. Talk with someone who actually has knowledge in this arena.
Yeah. Bottom line, whether it's my timeline or yours, the point is the pinch is coming and it will reveal itself in the very near future. That's the takeaway. It's coming. It's going to be in this presidency for sure. Like
Ted,
it's
Ted, are you getting the sense that Manila just wants to get pinched?
I think she wants to be pinched. Yeah.
You better talk to
Lord.
her partner about that.
I'm already feeling the pitch.
Yeah, we were talking about kinks earlier in the show. So
I know that's whole different topic. Different topic. You're supposed to enjoy your weird kinks or fetishes or whatever. I'm not enjoying this pinch right now, having been laid off.
Pinches in your mind.
I don't know. I'm just being negative Nancy right now. So I didn't invest the way Nancy Pelosi did. So
just
can
remember
you that a congressman can invest without impunity.
Right.
If I went and did the same thing, I'd be in jail for 20 years.
Right. It's incredible.
It's crazy.
We should have followed Nancy Pelosi's stocks.
But you still can, right? There's that investment club.
There's that tracker
that does that. Yeah.
I think it's like the Nancy Pelosi investment tracker, I think is what it's called, or something like that.
The Pelosi
it's pretty
index.
Funny.
Yeah,
I think so.
exactly.
It is the Pelosi index. It's true.
But I always remember something that my old boss at Bear Stearns told me when he was training me. He's like, every day, this tells you how old the story was. Every day, 100 million shares change hands in the New York Stock Exchange. Right? He was like, 50% of the people who are in these transactions are right, and 50% of them are wrong. Every trade, one person's making a mistake, the other person's doing the right thing. And you just have to remember, rising market. There's a lot. It's just as many opportunities in a declining market. Just as many.
Absolutely.
So
you can make money in any upside or downside.
Makes no difference. Yeah, it's about the bet.
That's right. That's right. You can hedge. You can make money in any market. Always appreciate your expertise, Aquiles. Thank you so much for joining us. This is Aquiles Larrea. He's the CEO and founder of Larrea Wealth Management. He's author of the book. His newest one is called Wise Up with Your Money. It's available now. You can check it out on Amazon, for example, and then go to his brand new YouTube channel. It's his name, Aquiles Larrea 1061. That's the YouTube channel. Thank you so much for your time, Aquiles. We'll be talking with you again, I think, pretty soon.
My pleasure, guys. And hopefully we'll start to see some even more good news in the economy coming our way.
Yeah, we have to talk Manila down from her pinch.
I'm just negative Nancy. That's all, because I'm not in the Nancy Pelosi boat. That's all.
It might be just the day. Today she might be negative. Tomorrow she's like, next thing you know, blue skies and rainbows.
No.
She's INTJ.
Death, rain,
we don't roll that way.
Death, rain, and destruction for 2025. That's my outlook.
All right.
Thanks, Aquiles.
Bye, Aquiles.
Bye-bye.